Hey everyone, it's Wednesday morning, February 11th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. So, U.S. stocks closed mixed on Tuesday, and it was a bit of a tug of war out there. The Dow Jones Industrial Average managed its third straight record close, inching up about 0.1%, while the broader market took a step back. The Standard & Poor's 500 slipped roughly 0.3%, and the Nasdaq fell about 0.6%, dragged lower by weakness in big tech names like Nvidia and Alphabet. Now, the big macro headline came from retail sales. December retail sales were basically flat compared to the prior month, which is a noticeable slowdown from November's 0.6% growth. That number came in well below expectations and signaled that consumer spending cooled off toward the end of the holiday season. And markets reacted pretty quickly. Those softer consumer numbers pushed traders to increase their bets on interest rate cuts from the Federal Reserve. Most still expect the Fed to hold rates steady at the next couple of meetings, but confidence in that view is fading. More than 75% of traders now expect rates to be lower by June. All of this sets the stage for today's January jobs report, which is firmly in focus after last week's signs that the labor market may be losing some momentum. And later this week, the latest inflation data will give the Fed another crucial data point as it balances growth and price stability. Over in the corporate world, wealth management stocks had a rough session. Concerns popped up after an artificial intelligence startup unveiled a new tool that raised fears about disruption across the industry. Shares of Charles Schwab, Raymond James Financial, and LPL Financial all dropped more than 6%. Earnings were also in focus. Investors looked through fresh results from companies like Coca-Cola and CVS Health, while Ford was one of the names reporting after the market close. And finally, a quick look at alternative assets. Gold and Bitcoin stayed on investors' radar as both tried to stabilize after last week's sharp pullback. Gold, which had pushed above $5,000 earlier in the week, slipped slightly, though experts remain constructive on its outlook for this year. Bitcoin, meanwhile, stayed under pressure, trading near $69,000, with volatility driven by what experts are calling a broader crisis of confidence. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.